My name is Peter Van Valkenburg, and I'm the Director of Research at Coin Center, an independent nonprofit focused on the public policy issues affecting cryptocurrency and public blockchain networks. What is Bitcoin? Bitcoin is the world's first cryptocurrency, and it works because of the world's first public blockchain network. What does Bitcoin do? It's simple. It lets you send and receive value to and from anyone in the world using nothing more than a computer and an internet connection. Now, why is it revolutionary? Because unlike every other tool for sending money over the internet, it works without the need to trust a middleman. The lack of any corporation in between means that Bitcoin is the world's first public digital payments infrastructure. And by public, I simply mean available to all and not owned by any single entity. Now, we have public infrastructure for information, for websites, for email. It's called the internet. But the only public payments infrastructure that we have is cash, as in paper money. And it only works in face-to-face transactions. Before Bitcoin, if you wanted to pay someone remotely over the phone or the internet, then you could not use public infrastructure. You would rely on a private bank to open their books and add a ledger entry that debits you and credits the person you're paying. And if you both don't use the same bank, well, then there'll be multiple banks and multiple ledger entries in between. With Bitcoin, the ledger is the public blockchain, and anyone can add an entry to that ledger, transferring their Bitcoins to someone else. And anyone, regardless of their nationality, race, religion, gender, sex, or creditworthiness, can for absolutely no cost create a Bitcoin address in order to receive payments digitally. Bitcoin is the world's first globally accessible public money. Is it perfect? No. Neither was email when it was invented in 1972. Bitcoin's not the best money on every margin. It's not yet accepted everywhere. It's not used often to quote prices, and it's not always a stable store of value. But it is working, and the mere fact that it works without trusted intermediaries is amazing. It's a computer science breakthrough, and it will be as significant for freedom, prosperity, and human flourishing as the birth of the internet.
That takes us into the 21st century. What is Bitcoin?
Bitcoin is a software, and it's a distributed software to operate a peer-to-peer network between members who are all equal on the network. They're all peers. And what this software does is that it allows you to operate a payment network between those peers. And that payment network has its own currency. And that seems like, just a simple software game. But the reason this is such a big deal is I believe Bitcoin is the most advanced form of money ever invented. And the reason for that comes from two properties that this network has. The first one is that the currency is the hardest money ever invented. It's the money whose supply is the most resistant to inflation. It's the first monetary asset that we've ever invented that is guaranteed to be fixed in its supply, that cannot be increased beyond a certain number. So there's only ever going to be 21 million Bitcoins. And that's a qualitative leap forward in our technologies of money. All of our monies leak, essentially, because people can always make more and more and more of them. The best money is the one that leaks the least, which is gold, because it only leaks 1.5%. In other words, your share of the gold stock is diluted by 1.5% every year. Ideally, you'd like it to be zero. Bitcoin is currently at around 1.8%, headed towards zero. So it's the first money that we've ever had that goes to zero in terms of terminal supply. So there'll never be more than 21 million Bitcoin. And I think that's a huge deal because, as I said earlier, money is always whatever is the hardest to make. And now Bitcoin is the hardest thing to make. And then the second property, which is extremely important as well, is the fact that it operates without the need to trust in anybody. It doesn't have a party that is in charge of it. It doesn't have a central authority that can, it's, as I said, it's peer to peer. So it only has users. It doesn't have any admins. There's no authority in charge of Bitcoin that can take your Bitcoin, that can stop you from using Bitcoin, that can change the rules of Bitcoin. They can't make more of it. So it's fixed. It's available for anybody in the world. It's the hardest money ever invented. And it is absolutely, I think, an enormously significant invention, because if you read the fiat standard and the Bitcoin standard as well, you'll see my perspective for why I think a very large number of problems in the world are caused by easy money, are caused by inflation, and caused by government having access to essentially an infinite recourse to people's wealth. And I think Bitcoin fixes this, because it allows us to have money that has the salability of gold across time, meaning it holds its value across time like gold, but much better than gold. But also it is similar to fiat in that fiat can travel quickly, but Bitcoin can travel even faster than fiat. So it combines gold's salability across time with fiat's salability across space in one immutable package that nobody can change.
As the ambition of the government expands, so must the currency supply. Well, I could say the money supply, but let's say the currency supply. You can triple the number of pesos in the economy, but it doesn't triple the amount of manufacturing capacity in the said economy. And it doesn't triple the amount of assets in the economy. It just triples the pesos. So as you increase the currency supply, then the price of all those scarce, desirable things will tend to go up rapidly. And the confidence of all of the institutions, the corporations, and the individual actors and trading partners will collapse.
So the expansion of the money supply, which is, put another way, is printing money. And so is that always bad, the expansion of the money supply? Is this just to put some terms on the table so we understand them? You nonchalantly say it's always on average expanding every year. The money supply is expanding every year by 7%. That's a bad thing. That's universally a bad thing.
It's awful. Well, I guess to be precise, it's the currency. Money. I would say money is monetary energy or economic energy. And the economic energy has to find its way into a medium. So if you want to move it rapidly as a medium of exchange, it has to find its way into currency. But the money can also flow into property, like a house or gold. If the money flows into property, it'll probably hold its value much better. If the money flows into currency, right? If you had put $100,000 in this house, you would have 305x return over 92 years. But if you had put the money, $100,000 in a safe deposit box and buried it in the basement, you would have lost 99.7% of your wealth over the same time period. So, the expansion of the currency creates a massive inefficiency in the society, what I'll call an adiabatic lapse. It's what we're doing is we're bleeding the civilization to death, right? One way to say it is a conventional view of inflation as CPI understates the human misery that's inflicted upon the working class and on mainstream companies by the political class. And so it's a massive shift of wealth from the working class to the propertied class. It's a massive shift of power from the free market to the centrally governed or the controlled market. It's a massive shift of power from the people to the government.
And look, the central bank was created in 1913 to emulate the original central bank that was created in 1607 by the Rothschild family to steal the wealth from the masses and give it to the rich. That's what central banks do, and they're really fucking good at it. And they've been doing it forever through this thing called inflation. And inflation, this idea that it's somehow good for you, it's somehow good that over a 30-year period, half of your purchasing power should be stolen. Why is that good for me? That is not good for me in any way, shape, or form. And so now it's accelerated. Like I live in Chapel Hill, North Carolina, and in theory, according to Zillow, my house went up 40% in value in the last 12 months. My house did not grow. It did not get more efficient. It actually wore out. I had to put money into it to keep it stable. It didn't go up. What happened is the toilet paper which we all spend to live got devalued. So it's not, we don't have inflation. We don't have inflation. We have currency devaluation. And this is how empires end. Every empire in the history of mankind has ended the same way. Cronyism replaces capitalism. Then the people at the top overspend. They get into debt that they can't pay back. And when you have too much debt, you have four options. You can pay it back. You could tax all the wealth of all the people in America. All the wealth, forget income, all the wealth, you could not pay the debt back.
Because money is just a good, like any other good. What makes money as a good unique among all goods is that we value it not for its own sake, but for its prospective exchange utility, which means we hope the vessel, whatever we choose to store our money in, we hope that vessel keeps its value long enough so we can trade it in the future for stuff we actually want, right? Nobody actually wants green little pieces of paper. Nobody actually wants Bitcoin. Nobody actually wants Bitcoin either. What we want those things to do is to hopefully allow us to trade them for things in the future we actually want, a vacation, a college education, property, whatever, right? So it's not that we want the money. We don't want the money. We want what the money can do for us in the future, what we can trade it for.
So then why is Bitcoin excellent money?
Well, I think that's for everybody to make up their own mind. I'll tell you how I think about it, though. There's really two primary dimensions that I think money should be evaluated on: salability across time and salability across space. So salability across time just means, will a money keep its value through time, or will it depreciate? The oldest fiat money that's in existence today is the British pound. And 371 years ago, when kind of the modern British pound started, it was equal to 1 pound of silver. 1 British pound bought you 1 pound of silver. Today, do you know what 1 pound of silver buys you in terms of British pounds?
I'm guessing that it buys you more than 1 British.
More than 1? A little bit, 174. So you used to buy 1 for 1. Now a pound of silver buys you 174 British pounds. And the key here is to understand what changed and what did not change. Okay, the silver itself did not change. 371 years ago, it weighed a pound. Today, it weighs a pound. 371 years ago, the silver had certain chemical properties. It's got the same chemical properties today. The silver did not change. The fiat changed. It depreciated more than 99%. So silver crushed fiat.
I hate the 99% number. I just hate that one.
Yeah, I just didn't want to take it out to that many decimals. But it's 99.763812. I don't know. It's a lot. It's basically worthless, right, relative to silver. But people talk about gold. What about silver versus gold? I mean, and the reality is gold has been far better and far more reliable. It's much better store of value than silver because it's scarcer and it's got a much lower supply growth. Gold grows at about 2% a year. Silver grows about 20-30% a year. So gold is a much better money than silver, but let's compare it to Bitcoin. I mean, gold still does grow. You print through mining, you print gold at about 2% a year, and Bitcoin's on an asymptotic journey to 0% inflation per year. So 2% a year, roughly times 50 years, and gold essentially depreciates completely versus Bitcoin. So Bitcoin will be worth far more than gold in the future once it clicks for people that gold is printed at a much higher rate, and that compounds, much higher, 1 or 2% a year, but that compounds over 10, 20, 30, 40, 50 years. But there's another property of gold that makes it weak relative to Bitcoin. And in fact, this is a property of Bitcoin that makes Bitcoin truly unique among any money in history, which is that Bitcoin is the first store of value ever in which its supply is entirely unaffected by its demand. You know, if we take the example of gold to prove this point, if gold went to, I don't know, $100,000 an ounce, so up 50x overnight, you and I know what's going to happen tomorrow morning. The miners are going to get to work very early, right?
I'd be mining it.
You and I would drop the phone and start mining, right? We're going to start mining. We're going to look around our house for gold. We're going to melt it down. We're going to drive up the supply. We can't skyrocket the supply, but we're going to drive up the supply. We're going to drive down the price of gold. If during the course of this conversation, people really feel like bullish on Bitcoin and Bitcoin goes to 1 million, I'm saying that with a smile, what's going to happen to the supply of Bitcoin? Nothing. That's incredible. Bitcoin is the first store of value in human history where its supply is never, can never, will never be affected by any amount of its increased demand. So the conclusion is that Bitcoin is better at being gold than gold because it's more saleable across time.
The problem with gold, though, essentially is that it was great for holding value. Again, back to our original definition, money is a device for moving value across time and space. So gold is excellent at holding value across time, but metals are pretty poor, especially for a globalizing society, at expressing value across space. They're very heavy and difficult to move. They're expensive to move, expensive to secure, et cetera, et cetera. So this is where paper currency was introduced. By abstracting gold into a paper currency, we could now increase its transactability across space. And so long as it was redeemable 1 for 1, right? 1 unit of currency for 1 ounce of gold, for instance, then it maintained its ability to express value across time as well. So we're basically augmenting this free market selected technology to make it more transactable across space and time. The problem with that, of course, is that it introduced the need. First of all, it made money debt. So now all of a sudden we don't have money. We have a paper certificate that's redeemable for money, which is gold. So this paper certificate becomes a debt instrument. And the problem is you now needed to trust the custodian, the bank, whoever's holding that gold. You have to trust that they will not produce paper currency in excess of their gold reserves. Otherwise, they are then the one artificially inflating the currency and able to steal from everyone else. And as it turns out, you know, again, money's like being the most important technology in the world. The temptation to manipulate its supply has proven historically to be essentially irresistible. And banks, which tend to become central banks or nationalized banking operations over time, have always violated that trust function placed within them.
Can you give us some recent examples of that?
Well, sure. In 1971, the infamous Nixon shock, he took the world off a gold standard. You know, subsequent to World War II, we held the Bretton Woods Conference where it was determined unilaterally by the United States that the dollar would be pegged to gold. Every other currency in the world would be pegged to the dollar. So this gave the United States the infamous exorbitant privilege to just basically be able to print whatever amount of money they want, send the world these paper certificates called dollars, and then receive goods and services in exchange. But other countries agreed to this, one, because the US was the dominant military power at the time, and two, because dollars were redeemable for gold. But from between 1944 and 1971, it reached a point where enough countries had lost faith in the dollar that they were asking to redeem their currencies for gold, that Nixon decided to spontaneously close the gold window. So he just moved the world off of a gold standard onto a purely fiat currency standard. And then since that point, actually since 1971 through today, it's been about a 50-year experiment, we have had disastrous socioeconomic consequences across a whole gamut of data. There's a great website to this effect I would just encourage listeners to check out called WTFhappenedin1971.com. And we've had obesity, suicide, addiction, clearly global debt to GDP has exploded. It just points towards the devastating force that is arbitrary inflation.
That's something that is unique about Bitcoin, which is that it is the coin that, I like to call it the Immaculate Conception. Somebody made these coins. Anybody could have mined the coins from the first day. They announced the currency and they said, I'm going to start running it on this day. And anybody could have joined. And since then, everybody who got Bitcoin got Bitcoin at the market price or because they mined it and expended resources which roughly cost them close to what the market price was. So there are no insiders in Bitcoin. And Bitcoin has operated this way for 12 years now.
So one problem is that we have an inflationary system, and that's problematic enough in developed countries, but let alone in smaller and more developing countries. They have much higher inflation levels on average, and usually within their lifetime they experience a hyperinflation and they just lose their savings if they were holding that currency. So that's number one, is all the inflationary angle. And then number two is the fact that it's mostly permissioned, and so you need permission from your bank to do things, and that can, again, in some countries that gets pretty benign, and in other countries that are more authoritarian, and according to estimates from like Freedom House, the way they depict it, about half the world lives under something that's classified as authoritarian or semi-authoritarian.
Yep.
So permission systems are obviously a big problem in that regard. And so the combination of not having developed savings and payments technology that's pretty open and having inflationary currency is really bad for a lot of people around the world.
Store of value. It is digital gold, right? It is money. There's only been one money for 5,000 years. One, gold. Gold is the only money. Money is an asset that exists in the absence of a liability. There's been nothing else that is money other than gold. Currency is not money, right? It is debt. JP Morgan said it best. Gold is money. Everything else is just credit. So now we have a digital form of gold, Bitcoin, and it will be money for the next 5,000 years or 10,000 years or however long. But that is not a risk asset. That is actually the antithesis of risk asset. Risk assets are assets that fluctuate based on GDP growth, interest rates, policy. Bitcoin is none of that.
Bitcoin continues to get stronger because it continues to demonstrate that it can do those few very simple technological tasks, and it can do them reliably, and it can do them according to the same rules that it has been doing them for 12 years. That's kind of the value proposition. It's immutable, it's decentralized, and the money supply is fixed. So that's kind of a big deal if you put all of these all together.
Right. And so it's hard for anyone to make a Bitcoin substitute that can catch up to it because it's established a kind of primacy given its track history of reliability and its widespread distribution. That's part of the argument for its primacy.
Yes, but I think it's more than that. It's not just, Coca-Cola and Pepsi catching up to one another, or McDonald's and Burger King. There is a fundamental issue here, which is that what you would want the most in this kind of digital currency, because after all, this is all numbers and ones and zeros, and programmers can change it. And so if your programmers can change the consensus parameters of the network, which basically all the other digital currencies can do at will, the other digital currencies, they have these hard forks which change the consensus parameters quite frequently, and particularly the successful ones, because the way that they managed to get successful was essentially through active management. And so they're more like companies rather than private protocols. And the key thing is, as you said, there is a first mover advantage, but there's also the problem of the immaculate conception. If you make a new Bitcoin that's going to start from scratch, you break consensus parameters, or you start by imposing new consensus parameters, you're already not starting with that immaculate conception. You're already starting with the idea that there's somebody in charge. And so now it's not 200 coins, there's about 10,000 coins. And if you've heard about any of them other than Bitcoin, it's because there's a small group of people that have been behind them. And so that, as far as I'm concerned, makes it highly unlikely that they would have a monetary role, because at the end of the day, what you appreciate about Bitcoin, what makes me pay attention to Bitcoin, is that it is neutral money that nobody can control. Anybody in the world can mine. Anybody can bring their computer onto the network and mine, and benefit from the mining. And it rewards only the most successful miners. It rewards only the most economic miners, because it has this thing called the difficulty adjustment, which is my favorite part of Bitcoin. It's really the magic glue that holds Bitcoin together, and I discuss it in the Bitcoin standard and in the fiat standard. What happens is that if more miners try and mine copper or gold or silver, you end up with a lot more copper or gold or silver. But with Bitcoin, the more miners that get into the network, you still get the same number of Bitcoin as was predetermined earlier. But the difference is that you don't get, but it just gets harder for the individual miners to get into the network. So it's more like a sports competition wherein there's one trophy, and then the more competitors get in, the trophy just gets harder to win. It doesn't get, you don't get more trophies handed out.
So how in the world did Satoshi figure this out? How did he? I don't understand how he could conceptualize this. It just doesn't make sense to me.
It's an incredible work of genius when you think about just the amount of expertise that he had to have in different fields of knowledge to bring this monster together is absolutely astounding.
Yeah, well, just the conceptualization to begin with, let alone the implementation, the engineering implementation.
To be fair, I mean, it wasn't like he invented this problem. It's a problem that had been around for many decades. People had been trying to build a digital form of money for decades. Since the 1970s and 80s and 90s, there have been attempts to do something like this. And the different attempts to produce something like this always came up against a technical problem called the Byzantine generals problem. And then Satoshi figured out a solution to it through the proof of work system, which is absolutely astounding.
The way Bitcoin came about seems like a story that's virtually impossible to believe. You couldn't make it up, right? So this unknown engineer, Satoshi, anonymous, came up with this idea that no one else had ever had, implemented it online, anonymized it, and then vanished essentially without a trace. I mean, how much do people know about him? Are we sure he's who invented it? And what the hell was he up to? And why did this happen? And why should an outsider believe any of this? Because it does seem like the plot of a bad science fiction novel.
I will confess that I did used to think about this in similar terms, but I'll say this: you use the wheel every day, but you don't know who invented the wheel. And we use a lot of things every day that you don't use them because you trust the guy who made them. You use them because they have a proven track record.
One other aspect of Bitcoin I have to ask, to me, on a human level, it's fascinating, is it was founded by Satoshi Nakamoto, an anonymous founder. There's no leader. So that's another aspect of the decentralization. It's leaderless.
Yeah.
So unfortunately, it's not a monarchy.
Fortunately.
Or fortunately, yes. Who is Satoshi Nakamoto, do you think? And first of all, is it you?
It definitely is not me. I don't know who it is.
If it was, would you tell me? It's a trick question.
I know, trick question. But I mean, everybody who knows me knows I can't really code. So
you would say that even if you could. But
that's true.
Do you think it's one person? Do you think it's multiple people? Is it interesting to you? Do you think it's fundamental to the coin itself, to not the coin, the entirety of the concept, that its founder is anonymous? And how much guts do you think it takes if it's one person to just walk away from so much money?
I've considered all these questions many times. It's very hard to formulate a definitive answer to all of them. I don't know who it is, and I don't know why he or them or she are not spending the coins that they most likely have. I think what really matters in Bitcoin about Satoshi is the fact that he's not there. And this is what's truly astonishing about it. The most important fact in Bitcoin is the fact that the creator has disappeared and the thing has continued to operate now for almost 12 years without him being there, or 11 years, I think it's been since he's left. And this is really the most important thing. And, maybe he died or she died, or they got into an accident on a road trip or whatever. And that's why they haven't accessed their coins. Maybe they're incapacitated for some reason. But whatever reason it is, I really think it's fate or serendipity that is giving us this very vital, very, very, very vital building ingredient in Bitcoin, which no other digital currency would ever recreate, which is that, because it was the first, it was the one that was able to establish the first mover advantage and get all of the people who were interested in the technology to get into it. And so that's an enormous advantage. But, the cherry on top, or what made the whole thing really function well, is the fact that the guy who made it disappeared. and that it continued to operate, which is just a clear illustration that this is a network with no admins. And I'm tempted to think that they're incapacitated in some way, probably dead or gone, because I can't believe I don't believe any human being would have this level of self-control to not want to meddle with their invention so much. Even if they, they might have had the self-control to like mine the first million coins to get the network going and then throw away the coins or send them to an address that they don't have the key to. Because they really just wanted the network to take off. They may have no access to the coins, and that's why they can't move them. I could see that happening, but I find it harder to believe that they would resist the temptation to mess with the network.
So, however, Bitcoin, while also maybe a good hard money hedge, is also something much bigger. And I really think that Bitcoin is an invention, I say akin to the invention of the combustion engine. I think it's akin to the discovery of electricity. And I sort of came to that conclusion, after that 6 months of work, because what I didn't realize in 2014 that I realized when I really dug in was that the 8-page white paper by Satoshi was really something miraculous, that it solved a math problem that had not been solved for literally hundreds of years, this Byzantine generals problem, the problem of distributed trust, and therefore how do two counterparties trust each other without an intermediary? And, that problem you would think was simple, like just how do I send you some value without an intermediary? But mathematicians, scientists, cryptographers, they were sitting around for years trying to figure out how to do it. And they couldn't until the mechanism of Bitcoin, the Bitcoin network, was explained. And I don't want to say invented, but then also explained in that 8-page white paper. And so when you see that as like the crowning moment of 30 years of scientific research, you're like, holy cow. All of this work came before the publishing of the white paper. This is something ingenious, something new. And I just, it was at that moment that I just thought, wow, this is much bigger than a store of value. This is much bigger than a hedge. This is basically the money protocol for the entire internet, right? So the internet, we send information back. Do you remember in the 90s, we used to be afraid to put our credit cards on it, because the internet was invented without a security apparatus on top of it. The Bitcoin network is this bulletproof security apparatus. It's never been hacked. I don't think it can ever be hacked now. The proof of work algorithm is too strong. And so I just think that at some point down the line, everything that we have of value, everything will be on a blockchain somewhere in this digital asset ecosystem. And you'll have central bank digital currencies there. You'll have a whole bunch of different blockchains that do different things. And Bitcoin will be, what Raoul Pal calls the pristine collateral of the new system, right? It's the undebasable asset that underpins all the other assets in this new digital world.
What am I looking at? Let's start first with, okay, I've explained to everybody now that this is the fastest adoption of any technology in all recorded history. So the chart you can see on the screen now shows that the internet, back in 1997, when it had 150 million users, was growing at 63% a year. 150 million users in crypto is present day, and it's growing at 113% a year. So this is why it's so hard for us all to catch up, because it's growing at a ridiculous pace. And it's only accelerating. I mean, we've seen in the last year alone the rise of DeFi, NFTs, DAOs, central bank digital currencies, stable coins, in a way that none of us could have expected. It's just happened so fast at such scale. And that's only going to continue. And that's a core philosophy of the exponential age.
When you want to buy something normally, using your normal bank card, this is what happens. I give my card details to the shop. The shop asks the bank if I'm good for the money. The bank checks its records to see if I've got enough in my account. If I do, it lets the shop know. It updates its records to show the movement of money from my account to the shop's. Oh, and it takes a little cut for its trouble. Now, if you wanted to remove the bank from that system, who else would you trust to keep those records and not alter them or cheat in any way? Well, I wouldn't trust you. I wouldn't trust you. In fact, I wouldn't trust any single person, but I might trust everyone. The idea is you don't have a central record of transactions. Instead, you distribute many, many copies of this ledger around the world. Each owner of each copy records every transaction. So, to buy something using cryptocurrency, I give the shop my details. The shop asks all the bookkeepers if I'm good for the money. The bookkeepers all check their records to see if I have enough. If I do, they tell the shop, and then all update their records to show the movement of money. So there's no way that a forged transaction can make it in. If I try to alter a ledger, it won't match all of the other copies, and it gets rejected. Oh, and one of them, at random, will be given a reward of some newly created cryptocurrency. This is how cryptocurrencies work. And remember, all of these bookkeepers, all of these ledgers, they're not actually people, they're computers. Lots of computers.